Yeah, so at this point, I'm with you there. Order flow in the 5-minute is bearish still. No indication wants to move higher. We've been disrespecting all these bullish PD arrays and displacing now. Displacement is key. So now we have secondary displacement. So if it wants to come back up into this range and offer, all of this is inefficient. So if you go to the 2-minute, the 3-minute, there's going to be gaps all within that range. This now, what is this now here? High, low, higher, high. Drops down with displacement. This area and price is where you want to see a setup potentially. So I'm always looking for the second stage of distribution as kind of my bread and butter. Very easy setup. So it wants to offer me a run back up into this inefficiency. And the order block here, more specifically the order block, this kind of cluster here. That's what I'm going to be looking to trade. If from here it goes black candle, black candle, black candle, black candle, and tags the sell side, it is what it is. Do not feel FOMO. I mentioned it before. As soon as we leave a consolidation, your brain is gonna instantly look for some sort of a reward for sitting through it. Right? It's always looking to, as soon as we leave consolidation, your anticipation is growing, and then boom, it starts to move. Very, very easy to jump into FOMO. Very easy. So the first point of self-discipline is what? Self-awareness. Also, we actually could react to this, and if we... I'm just going to wait 40 seconds. We'll see if I want this candle to print. Yeah, SMT with YM. For the most part, yeah. Yeah, that low. The opening range. Opening range is so important, right? Because if, preferably on a day-to-day basis, if you look at the opening range, by the way, if we react to this inefficiency, we're extremely weak. We can't even get up to the breaker here, and it's just using this as a mitigation block. All right, so this, depending on how this candle closes, this could be potential measuring gap here. I want to see if it prints and forms the gap. If this prints and forms a gap, and we've got this bearish order block now, next 5-minute candle could run up into it, tag it, shorting opportunity. Potentially leave this as a breakaway gap, leave this open as a measuring gap. IO fed the measuring gap, short it into the sell side and the fib projections, and also the standard deviation of the -1 of the opening range, which would put you down to here. So watch the 5. Sorry, I don't know if that went over someone's head, but if it did, don't worry about it. Nothing in there that you need to know. 2 minutes left on this candle. Let this candle print and be done. But look at how now I'm expecting the silver bullet order flow to be one-sided. Okay, 10 a.m. is showing me that it wants to drop with displacement. It's already taken out the opening range low. We have SMT at the highs. We feel any signatures to perform, it wants to go higher. On this exact example on the 15-minute chart, there's nothing below that sell side from here except this sell side here. So I don't know why we'd be dropping into a 15-minute POI or an hourly POI below us if there's nothing there. It's not showing any willingness to go higher. 5-minute shows it's extremely weak. Once this candle prints, next minute and 35, we're going to have a 5-minute gap with a 5-minute bearish order block. Retraces back into that bearish order block. Now we have standard deviation targets. We have sell side targets. We have opening range targets, all pointing to lower than actually this sell side here. So, and time of day lining up. So if we can get a silver bullet entry with the second stage of distribution kind of looking like this, that's what I would favor at this point. And at this point, I do not want to flip long. Okay, so this is kind of my last bias. Only want shorts. If no short. So at this point, this is kind of my line in the sand. It's either it gives me, I've waited about 50 minutes or so for this to form. At this point, I can not really argue any longs as to why it should be bullish in this case. And it's NFP protocol. So I don't want to be flipping back and forth, trying to get trades. It's either this is going to offer me a shorting opportunity or I'm turning off the charts. Simple as that. So if it wants to come up into, I want this 5-minute candle to print first to see if you can form a gap there, which it looks like it may come up and fill this part, and we have just this gap. So we may not get the measuring gap. All right, there you go. 5-minute gap formed. Inefficiency here. I want to see if we can just run slightly into it. Missed it. 5-minute Sibby. Obviously, it probably will just trade through that and tag this one now. Higher one. We're just going to mark that out. Gives me the breaker and starts rolling over. I'll look at the 15-second chart. Probably just take a short off that. Digging up to the Sibby. Now, the reason I'm being patient is because we saw all these other trade ideas that I marked out. I'm like, watch this, watch this, watch this. And they just flew right through it. So I'm not going to have a limit order on this kind of scenario and use a limit order because I don't want to be in a position where just one candle smacks me out, right? So I'd rather just be patient and wait to see if it wants to give me what I want. And if it does, then I would be happy with that. So right now I'm waiting for to see if I can get a sell stop fill. Trailing, I basically have a point of inversion. As soon as it tags that point of inversion and crosses through that, I'll be tripped in on a sell stop. And it's basically like a market order at a specific point. So I don't have to manually go in and hit sell. I can just use a stop order here. And when it crosses this, it instantly fills me short. My stop loss still goes above here. Take profit goes below. But depending on how it reacts to this 1 minute area, we just tagged the wick of that. So at a minimum, we did tag the order block. We did trade into the inefficiency there. And it looks like it wants to give some reaction to it, at least by how it's printing now. I don't like the fact that we're not displacing. So I'm watching that first. We are getting some immediate rebalances there. Low risk, low stop loss. So I got tripped in there. I want to see if that's going to be used as the intermediate term high now. I'm going to target down to, on the 1 minute chart, down to the opening range -1. And then put a stop or a buy limit order on the sell side here that's resting. And I'm not going to get greedy and try and target the opening, the -1 standard deviation. Sorry, the -2 standard deviation, because to me it's unlikely to just, be very, very, I told you low hanging fruits, right? So we're going to try and just go for the low hanging fruit. And if it comes up and stops me out because it wants to fill the breaker, then so be it. It's just high resistance. I'm not going to say anything much about that. Also, there's this as a low hanging fruit objective as well. So if this wants to give me as a low hanging fruit too, can do that. We could just trim this to here and trim this to here and just watch as like a kind of a scalp. Yeah, we'll do that. We'll do that, and then we'll just kind of watch to see if it wants to displace through there, and it'll just be part of the analysis, right? But obviously with the stop orders, you're not going to get a perfect fill. But it's not bad, right? Stop sell. Yep. So on 15-second chart, I'm looking at a point of inversion. Okay, so we tag a higher time frame PD array. I'm basically getting in on this SysD, but I don't want it to tag the SysD and keep moving, and then boom, I got a short. I want it to just tag the SysD, and that's instantaneously, boom, that's the change in the state. I talked about that earlier, right? So this down closing candle is an intermediate term low, right? Fills a gap, intermediate term low, short term low there. What are intermediate term lows? The true market structure shift. So just like how you use one for a stop placement, I can use another one for an entry. All right. And I'm using some advanced stuff, but it makes logical sense, right? So we're tagging the array, tagging the wick portion of it, the very, very weak portion, into the 5-minute gap with the bias and narrative in mind. And then boom, now it's dropping. As soon as it tags out that, I can get filled in limit order there, place my stop above the high, take profit, and just let it go. Okay, and it's stop orders are very, once you kind of fall, I think stop orders are low-key the best instead of a limit order, because limit orders sometimes, I don't really use limit orders all that often now. In the beginning, you have to use limit orders because you're going to want to just get in whenever it looks good, but you don't know what looks good. So use limit orders in the beginning. And if you get stopped out, you get stopped out. It is what it is. But stop orders are very nice too. And if you can use both and have the tool of marker orders, stop orders, and limit orders, you know when to use each one, you can get some pretty good fills. And it's much easier to trade when you have a different arsenal of tools, just like how you use different PD arrays, same exact thing in entry. Right now, here, I could be trimming my stop to here. I could be trimming it to here. It's probably safe. We just filled a gap. I'm not expecting it to come back up and tag this order block wick. You know, I'm actually going to do it because, to be honest, the fact that we're displacing like this and holding below the old selling, to me, looks pretty good. I don't want it to come up and fill this wick again because it's probably just going to come up and tag the breaker, and I'm going to be out of the trade by then. So this also as well is going to be a discounter. Whoops, discounter right here. What the heck just happened? This is going to be discount array. So we could come down, dig into the wick portion, and then come back up slightly back into premium, and then drop down. So whenever you have a large wick like this that's forming the sell side, you anticipate that. I'm anticipating, especially when it's on a higher time frame, like a 15-minute plus. You look to see how is it printing and closing relative to that wick. If it's closing below 50%, we're likely to go to 75 and then 100. If we're respecting 25 to 50, well then now you're going to look for a retracement at a premium, and how far is that retracement going to happen? If there's a child dealing range like this, well then sure, we could come back up into premium there. I do not want it to reference this higher time frame, what's it called? Dealing range. Now if it can stay below this here, very, very nice. Candle bodies, what I mean, stay below. The candle bodies can stay below there, very, very nice. But at this point, you know, I could get off the 5 minute and just look at the 1 minute. Like I said earlier, you know, the 5 minute, I've already done my analysis on there. It's pointing to, wants to be bearish. Already lined up kind of a setup to here. Now on low prob days, you have to accept risk. You cannot consistently move and trim stops because you don't know when it's going to go back right into that high resistance kind of environment and come up and take your stop and go back to TP. So my suggestion, especially with how much, look, I know you're not supposed to be looking at the P&L, but look at how much this is relative to how many contracts I'm using. This displacement here is already from here to here, it's 200 points. So the volatility right now is very, very high, very high. Anytime you see that, you have to drop risk. You cannot just be using 4 contracts or whatever your normal contract size is on a day where it's high risk, especially when you learn in live accounts, they have margin requirements. And what they can do is they increase your margin requirement where now you can't even trade the amount of your contract limit reduces. So in a low probability environment, especially in a high volatile low probability environment, what do you have to do? Decrease risk, accept risk. You cannot trim stop aggressively. I still manage the position the way I want to manage the position. So after this limit order is filled, I'll move it to break even. But I'm not going to try and trim it to here or trim it to the order block or try and trim it to whatever I'm expecting, right? So here's a limit order getting filled. Thank you. Trim this to right to break even. All right. Actually, we'll cover costs and commissions as well. And now let's hands off, free trade in the sense of, you know, the risk has been removed. Costs and commissions have been covered. Sell side is still in the crosshairs. We're looking good in terms of what time is it? 10:30. So you're expecting your new low of the current session to be formed at 10:30. So now you can see the time element lining up perfectly. Opening range forming the high, 10:30 forming the low right there at a random time. I'm not expecting that be the exact low because obviously we're still looking for that as the sell side target, but there's time precision. I posted this on Twitter, I don't know how long ago, like probably 10 months ago about this. But when you go and you study, how does the New York session print and what's like the bread and butter, easy setups to find is all you're doing is you're using this kind of open, high, low, close, open, low, high, close framework, and you time it. This is going to be your opening range. This is going to be 10:30 to 11. If you understand that, and all you have to try and do is find a setup in here, there's your everyday sort of setup. And that's what I'm trying to look for every day. If I can't get the highest high at 9:30 or at 9:50, I skip it and I go to Silver Bullet. Silver Bullet is my last ditch, but it's going to be there every day. Okay, ICT is true. Like what he says is true. It's going to be there every day. I don't care what news it is. I don't care what the day is. I don't care if it's low prob. I don't care if it's high prob. Silver bullet's going to be there. So using that as a very, there's time-based models and there's time-based precision that these markets follow. It's easy to trust. Okay, if I don't like this, I wait. If I don't like this, I skip it. I don't like this, I skip it. In the beginning, you're just gonna have one model. And I encourage those in the beginning to use the 950 macro. This would still be within the 950 macro here, the 1005, right? So it still offers you really, really good entries. That's why in the macro, you're getting in earlier to this time. Preferably in a bearish environment, I mentioned this in the advanced time guide, you want to be seeing your high of the session put in at 3 times, 8:30, 9:30, or 10. At the latest, what time? 10. So by opening range, if I can't get a bias, I turn off the charts. That means I can still get a bias going to the opening range, but I have to see some stuff respected to, I'm not going to instantly just get in short because I feel like it. I still got to see an entry model. But using that framework, you can get very, very clean bread and butter setups every single day of the week. Even yesterday. Look at it yesterday. Look at the 9:30 created the high, 9:50 retracement inside the macro time. It drops down. It's a little bit funky, but then silver bullet's still there. And what is this? I'm expecting there's going to be, like this here is probably going to be an IO Fed, and it's going to be the second state of distribution between the estimated, we'll say this is the high of the market maker model, down to here. You swing grade it, 75% is right there. Boom. You think it's random? It's not. It's not. Where's the measuring gap forming? What did I tell you? Measuring gap formed between 50% of that range. So if you want to put it there, it lines up with the sell side. Anyways, look at the fact that we're holding this old selling. So I can now trim my stop to there. That's short-term swing high. Already formed a short swing high here. Traded up into a PD array. I'm not expecting that to be traded to at this point, right? So that's what I'm talking about here. Now we're approaching the wick. So as we get deeper into the wick, how do we hold it, and what's the price action going to be doing? Does that make sense though? I think it was a very clean way to look at it. Called beforehand, executed on, and to me, this proves I'm a good trader. Not because I can trade, not because I can wait. I can take a trade. And it's a winning trade. The fact that yesterday I did what I was supposed to be doing. What was I supposed to be doing? Sleeping in 30 minutes. All right. I look at the charts after 1600, right? Today, wake up. I told you it's going to stream today. Get a bias. If there's no bias, I don't get a bias. Wait patiently for a setup to form. Execute on that position to form. It's for the past 2 weeks. That's what I've been doing, right? And you've seen it live, okay? It's the same thing. And that to me is what I know. I'm a good trader. If this is going to run to TP, a bad trader is always going to look at the would have, should have, could have. I could have held it to here. It could have held it to here. It's probably going to go to these levels. It's probably going to. I'm hungry. I don't want to be in a trade until noon. Like, to be completely honest. So I'm trying to just get my setup and leave. Like that's what it is. It like detach yourself from the money side of it. Just become a trader. Become a trader. I am a trader because I can sleep in on a day. I'm a trader because I can wake up at a certain time. If I can't find a bias, I can't find a bias. I know exactly. Yeah, I gotta show up on Twitter. That's why all those guys on Twitter and stuff that flexing all their stuff, it doesn't matter to me. Like, it just doesn't make sense, to be honest. Especially as a trader, the job is you want it for freedom. Like, I don't share my P&Ls and stuff because, first of all, I owe it to nobody. Second of all, I can prove throughout videos and live executions that I can read the charts. And I also want freedom. I'm not glued to social media. It doesn't rule my life. I got stuff to do, better stuff to do. Go outside, literally anything. But that's what, to me, it proves I'm a good trader. I may miss a setup. Yesterday, look at yesterday's price action. There was a nice 950 macro setup and a short right off of the 930 execution or 930 high of the day. You still have the time precision here to here. 930 form of the high, drops down, inefficiency, trades up into that, drops down again, inefficiency. I would have taken that right there. 958, stop above the high. You can still still need to go all the way down. Or I can still find a setup on this day, right? Still follows the same exact stuff, but you don't need every single move. You don't need every single day. I know when my setups are going to be there, what day of the week it's going to form, when I can sleep in, when I can look at the charts. And that's trading. When you get to a certain point, less is more. The learning part of it, you want to absorb as much as you can. But I think if, for the most point of people, if you're in this stream and you're understanding majority of what I'm saying on these streams, you don't need more. You need less. You need quality over quantity. You need patience over execution. Right? Yeah, the 15-second entry. Yeah. So the bias was there, already framed, right? So I'm looking to see if, I mentioned, okay, I'm at this point, I don't want to see anything but shorts. I got a 5-minute Sibi there. I also got the 1-minute breaker as well. And I want to see how do we react to it. I wanted to see if the breaker get tagged and I could get that as an entry short as soon as it start to leave. But I understand that, in a best case scenario, it's referencing the wick here. It's going to come all the way back into the weakest port, which is that wick. All right. And that wick of this up closing candle, right? That's a bearish order block. So if you want to, you can actually minimize it to this, and this becomes your B, OB minus. Boom, tags it there. So I acknowledge that. That's fine. Then we drop down. I'm not looking to get into a limit order here because I don't know how far it's going to dig. Like I said, in high resistance environments, we could trade all the way back up. Okay, this is kind of annoying me. Oh, that's fine. Yeah. In a high resistance environment, you could come all the way back up into the range. See you, Lewis. Take care. Talk to you soon. I don't know how far it's going to go, so I'm using basically invalidation, kind of an IFVG entry, if you would. So what I'm waiting for is that higher time frame PDA rate to be tagged, and then on 1 minute, where would your entry be? The limit order, the stop placement here, because the up closing candles tag into the array, that would be your change in the state of delivery. I understand as well how to read the 15-second chart. It's the same exact thing as the 1. So if I know that everything is in line, I can get an even smaller time frame entry because that's going to be fractal. So I had my stop order there originally, then I went to the 15-second chart. I was looking for the same criteria. Up closing candle range, tags into it. I could have placed my stop limit in there, my stop order there, and gotten filled. I liked this, to me, is kind of one consecutive breaker, if you can see that. I don't really like this little portion here. I like this chunk. Boom, it goes high, low, higher, high, tags into the array. I like that as my change in state delivery. Personally, that's where I'm getting filled in as a stop limit order. Stop one above the high, take profit at the low hanging fruit objectives, and then obviously this one down here. So, and like I said, you want to watch how we respect this wick. Okay, so we're at this point we're respecting 50%. Okay, we're not closing above. So you can just be mindful of that. I hope that makes sense, Flip Club. Because think about if price is fractally, this is a reversal, right? Higher time from array. Think of this as a 15-minute chart. If this is a 15-minute chart on a 1-minute chart, it'd be the same thing. I'm using the stage of price delivery is what? The reversal. So the PD rate I'm going to use is either a turtle soup. I can't use a turtle soup in this case. I mean, I could, but it's going to be harder, really, really hard for me to know exactly what high is going to be swept, and time as well is not on my side. I like to just turtle soup at 9:30 or 10 o'clock. So that is kind of out of the picture. What's the next PD rate in a reversal signature? SysD. Boom. So I don't need to see the soup. I don't need to see the sweep on stops to the breaker to the inefficiency, and then it retraces into the breaker inefficiency, and then I go short there. It's already doing that here, right? It's already showing me that. It's already showing me it wants to go into the breaker, into the inefficiency. So on a lower time frame, I'm just waiting for as soon as it shows me it wants to go down, I'm in. That's the logic behind it. As soon as it shows me it wants to keep going, boom, I'm in. And that's why, so if you go to a 15-second and don't see anything better then the 1 minute you'll stick to the, yeah, exactly. Yep. Anytime I'm really dropping to the 15-second chart is because I'm using the same analysis as I do every single day. I can only use a 1 minute entry if what? The 5 minute lines up. I can only use the 15-second if the 1 minute lines up. Do not fall into the habit of trying to just drop time frames to get an entry. You'll always find an entry on a lower time frame. Always. There's always going to be a gap. There's always going to be a stop run. Yeah, I can go to a 1 second chart and you're going to see stuff there every single time. So don't fall into the trap of thinking that on a lower time frame there's always going to be a better entry and then immediately trying to just get an entry when it's there. If you can't find it on the 1 minute, if you can't find it on the 5 minute, you're not going to be able to trust the 15-second, right? So I got to get that out there. So don't think that it's just you can just always just trade the 15. But exactly, yep. It was a 5 minute order block with a civvy plus the 1 minute breaker plus the 15-second SIST. So as I'm going down the time frames fractally, 15 minutes to the 5 minutes to the 1 minute to the 15-second. And my stop is still going to go on a 1 minute swing high. Why? Because that's where I've gotten my data from. I've back tested, I've gotten my data in trades off of 1 minute swing points and 1 minute order blocks, things like that. So I'm not going to trim my stop on a 15-second chart. It's always going to be on a 1 minute because that's what I've spent the most amount of time watching and I'm comfortable with that. So if you take a 15-second execution, I'm not going to manage it on the 15-second chart because I'm not as comfortable, to be completely honest. I could probably do it, but if I were to get stopped out on a 15-second chart and it comes down to my take profit and all I have to do is just look at a 1 minute, to me, that's greed. To me, it's very greedy for me to go on a 15-second chart and think that I'm ICT and start managing my stop on every freaking swing low and swing high. I can't do that consistently. I may be able to do it once, but it's about the process. So if my process says I can only manage my stop on the 1, I want to do that because that's going to produce me the most amount of growth and profitability over the long term. Okay. It's always for the long, you got to think in the long term. One setup doesn't matter. One missed day doesn't matter. One windfall win doesn't matter. You got to think, is this consistency? You have to be consistent. Scary obvious to me when I get to chat throughout the setups on PA with you. Love it. Anytime. When did your bullish bias around the first presentation gap get invalidated? I was mentioning the fact that I'm looking for secondary displacement to confirm if I'm in a very difficult environment, I need to see secondary displacement. All I'm waiting for really is just if I can frame. So this is the first leg of displacement, tags into an array, respects it, second leg of displacement. If we're respecting that, I can take that as a setup. So in this case, we tagged the sell side, ran back up, dropped into this inefficiency, already high resistance. Then it displaces up again. That's good. Bullish order block confirmed. First presentation gap is now being inversed potentially. So that's what? 1 PD array, 2 PD arrays, 3 PD arrays. Boom. Now it drops into that. It's not respecting this inefficiency. It's coming into this gap and it's not willing to leave. Wicking. And I mentioned on the stream, you can go back and watch. Why is the first presentation gap being wicked into? I don't like that. It should be just closing through aggressively. So the fact that it's showing me all of that and I can't frame any longs, then it boom, it drops. That to me invalidates the bullish bias and goes back to a bearish bias. And I can't flip after that point because I've already went boom, 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 boom. Okay, now I'm bearish. I'm not going to try and argue for bullish because at that point, what is it? I can't read it. I'm going to become emotional. I'm not going to necessarily at that moment become emotional, but I'm saying I'm not going to be able to read it precisely. And it's more likely to be entering into a consolidation period than it is actually a tradable environment, right? So we're dropping down here into the sell side. Definitely going to tag it at this point. I'm going to trim my stop now to the order block here, swing high. Like I'm worried about my limit order filling, not my stop loss, as you could tell. So we'll get it tagged here probably the next 2 minutes. There you go. Thank you. Yippee. Screenshot. I'll put it in the stream trades if you want to see. But now we can get off of this crappy PA. And you can see, even when you've got Powell, you've got NFP doing random stuff, there's still precision in these markets. You just got to choose, okay? You can trade every single day. You can. You can do way more than you're going to be able to do, but you need to have discipline and you need to have management of yourself. All right. So I'm not going to get, I know that anything below the sell side, it's likely to run down here, but I know that I would rather get filled out here and deal with the what is of, I'm glad I took this execution from here to here to here. If it runs to here, if it runs to here, if Trump speaks and Powell speaks and it drops 3,000 points, you cannot look at the at the should have, could have, would have. At this point, my job is done. Whatever happens is whatever happens, right? At this point, this is what my mind has done. That's all I can see mentally. Okay? So if you constantly are dealing with the what is, the what ifs, I should have held it here. I should have placed my stop here. I could have gotten on an entry here. What good does that do you? It doesn't do anything. It's worrying and you can't control that, right? I can only control what the what is. What is the data? Data is data. It depends on how you look at it. Someone who looks at for me, I look at it as a day yesterday of me not trading as good because it shows that I'm disciplined. It shows that I'm patient. It shows that I'm following my process. Someone who looks at that data of me sleeping in is going to be for 30 minutes. It's going to be like, oh, that guy's lazy. He's not taking a trade. Look at this missed trade setup you took at you could have taken a 950. Look how far we displaced going into the morning. You could have shorted it yesterday at 950 and held it all the way until today at 1047. Why didn't you do that? What good is that going to do me? Absolutely nothing. So in your journal, do not ever write should, could, or would. You always have to deal with the what is and not the what if. Deal with the what is. What did you do that was good? What did you do that you would keep the same? What would you do that you would change? What do you need to improve on? And you treat yourself like a coach, not a critic. Okay, and that's how you get better at journaling. You never write anything negative, and you deal with the what is. Period. That's how you fix it. Okay, you got to approach yourselves, and you got to look at stuff. Yeah, exactly. What if a bomb fell? What if anything happens? What if a bomb fell on your head today? And look, we're tagging the opening range standard deviation. So, like I said, it's most likely going to tag these levels because logically that's what it should be doing. I don't need it to go all the way down there. To me, that I don't need to be greedy on a day like today, especially when I don't have a bias. I'm not trying to come in here and scalp. This is a scalp to me. Okay, I'm just taking the last portion of the move. What time it's going to form? I know the PD raise I'm using, and still, I don't know how many points that was. 193 points. It is what it is. All right. Lower risk because of the volatility today, and because kind of a weird PA. But at this point, I could be holding at this point. This would kind of be my last targets if I was to be in a position. Would be this kind of opening range, and since it doesn't really line up with any higher time frame PD array from the past 60 days, then at this point you could just be using the standard deviation as a target. I prefer if it's lined up with a PD array, but since I have to go back like 4 months to find the array, it's not a big deal to me. I'm not gonna, to be honest, I'm just not gonna search for that. So I'm just gonna trust that it's gonna serve the proper function of price. Dip into this -2 here. There you go. So tag the -2. And oh no, I missed 90 points. Oh no. Not a big deal. All right. So at this point now, what are you looking for? Retracement or reversal potentially from this standard deviation. And if it drops and goes all the way to the -4, then yeah, exactly. Yeah. I don't know if it goes for the same for 4 and 6. I'm not sure. This is precision. This is what good PA looks like. Like you see how when spring comes, we can just destroy these markets. I told you before in December and January, just wait. Just wait. We didn't have tons of streams. You didn't have a lot of demo trades on stream. You just have to wait and be patient. It's the same stuff every year. Spring comes, you can destroy these markets. All right. Here's the execution. You can see we're reacting nicely off of the -2, -2.5 randomly. Whatever. People, it's not algorithmic. So we will have a backtesting stream sometime this weekend, probably tomorrow. Most likely tomorrow. I'm gonna be next week. The streams will be from my laptop. I'm not gonna be home. I'll be away on vacation from Monday through Thursday. Actually, Monday through technically just Wednesday. I'll be back on Thursday. So Thursday, Friday, we'll have normal streams. But if the stream calendar says Monday through Wednesday, it'll just be from my laptop. So it's not going to be super fancy or anything. I may not even be able to see the chat depending on how my laptop explodes or not. So take care the rest of your weekend. Do what you need to do. Journal. Review the weekend as well. Like review the week. Review your executions. Review your tape read. Review your biases. Review your journal. Do not forget to review your journal. Reading your journal even on a Saturday morning with a cup of coffee and just looking at Monday through Friday. How did I execute mentally? It's very important. All right. So take care. I'm praying for you guys and your success. If you got any questions, reach out to me. I'll be more than happy to help you. If you want to pick up the PDF, if you want to join the private or the tier 3, book a one-on-one, you let me know, and we will make sure that you are taken care of. So stay safe, and I will talk to you guys soon. Peace.
Where do you come from?
Another galaxy. You know they're out there. You know they're out there. You know they're out there, don't you?